It's Friday morning, the edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. Glad you're able to make it into today's video. Let's go ahead and do what we do each and every day. Kick off the day by looking at our same 10 to 12 futures markets, identifying potential breakout areas from a technical perspective, as well as potential turning points from a technical perspective as well. Hoping to give you a little bit of experience and knowledge on how these lines and these levels affect the market from a technical perspective. As always, we leave the lines on the chart so that you can see how they work out over time. So let's dive into it. So starting with the S&P. S&P 500. So one of the things about the hourly chart of the S&P, and I thought yesterday could have been moving day, and we could have made it all the way down to here. We did not. However, I am very keen to this. Let me change this line here. I don't know why I've got that set as a default. I'm very keen to the fact that I've got higher swing lows. I've got higher swing lows in my S&P 500. I'm also very keen to the fact that I have lower swing highs. Now, this is typically a pattern which indicates that there's some sort of a breakout about to occur one way or the other. And so this is not technically a symmetrical triangle pattern. Almost. To really be a symmetrical triangle pattern, you need to have multiple touch points. All right, so call this the beginning, and we have touch point 1, 2, 3, 4, 5. Now, typically, when you use these types of touches, what you do for its expected movement is you measure touch point 2 to the opposite line. Remember, this is the initiation. 1, 2, 3, 4, 5. This is a measured move scenario for those of you that use. Now, by the way, do I completely buy into price chart patterns? Not necessarily, but what I do know is that there's a lot of people that do, and a lot of algorithms that do as well. And that means that if we get a breakdown, look where it puts us. Now, I'm not saying that I'm going to short the breakdown. I'm also not saying I'm going to go long the breakdown. But if we do get the breakdown, it puts us right about at this area here where we believe there's a good reversal point. So my point is that if we break out to the downside, don't just blindly short and hope that it's going to keep going forever. Make sure that you have a profit objective in mind. Same thing if we get along, make sure that you've got a profit objective in mind, which I think would be somewhere right around this area here. And I like these measured moves, and these are on, I think there's a website called chartpatterns.com that has a lot of these. Thomas Bulkowski, I think, is the name of the guy who wrote a lot of that information, so giving credit where credit is due. But it's an interesting way to look at it. It's not officially a full symmetrical triangle pattern because you'd want this second touch and third touch to be a bit tighter to each other, but it is definitely that shape which is being formed on the S&P. So kind of keep that area in mind. Next, the NQ. The NQ yesterday I talked about we're in between a range. We're still in between that range, so there's really nothing really different to do here from a technical or line drawing perspective. So we're just going to leave this trade as is. Once again, I fully could see a breakdown one way or the other, and typically on Fridays, what we've seen the last few weeks are violent moves on Fridays. A couple of weeks ago, it was this huge, what my friend Eric calls the face-ripping rally on a Friday. And a couple of weeks before that, on Friday, we had the huge sell-off at the end of the day. And on last Friday, we also sold off at the end of the day. So we've seen sell-offs 2 of the last 3 weeks on Fridays. Today, I'm not sure, but I do anticipate some sort of a large movement. So understand that as you carry futures past noon today. In the crude oil markets, we had talked about a potential if we got down below this 61.12 area yesterday, and this is why we use candle-to-candle style of trading, and we didn't get below 61.12. This is a great example of candle-to-candle style of trading, keeping us out of a bad trade. We were looking for a potential reversal off of this candlestick and then reversing back down, and it never met entry. Nothing wrong with that at all. Those are typically, sometimes your best entries are the ones you don't have, right? It's like the old Garth Brooks song. Sometimes the God's greatest gifts are unanswered prayers. which my high school sweetheart probably says all the time about me. I'm just kidding. Not that she's listening, but this is a potential reversal point up here. And I've been looking at it for a while. We've been too far away for me to really highlight it, but I'm going to put it in now in case we happen to have a gigantic run today and we get there on Sunday. I think we may get a bit of a reversal here. I'm going to change this to a dashed line for a couple of reasons. Let me explain why. Now, I'm still going to care about the arrival into here, but it's a dashed line. Now, the thing I like about it is that it's the origin of this breakdown from, and I do genuinely believe in these triangular patterns as momentum, patterns. So this was a descending triangular pattern, but oftentimes the retests to those are still valid trades. All right, so now crude oil, there's, if you really wanted to, there's probably even on the 15-minute chart, an area right in this region about here. A little bit of a smaller level, but still something that could become valid nonetheless. I'm going to change this to a purple line because we're on the small time frame. And just having the lines as different colors just gives me, without having to think about it, I quickly know, because the 1 hour chart is the chart that I use in this recording. I will tell you, and I don't have time to go through multiple time frames in every chart that I identify. But in this recording, I use primarily the 1 hour chart as my foundation chart and then build everything off of it. But I know by my style of lines that this is an entry that is wait for price to come in 35 to 50% and then get short as it comes out. I know that this was found on the 15-minute, and I know that this line is a breakout. So by having a key in my head of the lines and being consistent with my drawing styles, it lets me know the trade a lot quicker. Gold. So in the gold market, we got a little bit of strength yesterday in GC. I think we could be getting a little bit of a rollover from where we are right now. Looking at the much bigger time period, the kind of the 4 hour chart, we've put in a lower swing high and a lower swing low. But we have a little bit of a kind of a, I'll call it a hook reversal here, not to steal a cheetah hook, but it's a little bit of a reversal here, coming kind of popping back up. So I'm going to hold fast on gold and just not take a trade on it. I'm going to let this thing be with the levels that I've got in play. Now, getting into our bonds and our currencies. So for most of the week, we've been pretty still on everything regarding our equity markets, but our bond markets and currency markets have been the ones that have been the runners. Now, this was the entry that we had off of this level here. Price came screaming down into there. Yesterday I talked about you should probably have some profits to pull off the table, so I'm going to remove this area now, as you should probably have pulled some profits off the table now that we've kind of come back into the region. I'm still not willing to take a long on this. The big picture is not telling me to do so. This area up here could be another potential short entry, so I'm going to highlight that one right there, kind of going forward. The Aussie still moving as it's running down. I think that if you're moving your stop below pivot highs, which I love the idea of moving stops below pivot highs, then your stop should be moved right down to about here, but there's really still no reason to get stopped out yet in this thing as it's kind of continuing to go. Remember, the pivot highs are a good way to manage stops when you've got these things running. If you go candle to candle, it's a little bit tighter and you're going to get stopped out more frequently. But if you caught the reversal and you're going on the pivots, then maybe you're still riding this thing a little bit to the downside. The Euro trade, this was. What's funny is that we turned off the trade off of this area right here, which would have been the most frustrating, because had we taken this one, we'd have been in the trade, stopped out very quickly, and then it would have went the way we thought it was going to go anyway, which is the most frustrating thing on the planet. I say that with my teeth clenched, as I'm sure many of you have dealt with that. But right now, we're just kind of in between two areas. And in the great words of Frozen, let it go, let it go. Canadian dollar futures starting to rally a little bit today as we're seeing some weakness in the dollar. And the weakness in the dollar is really what's helping our strength in the equity markets as well. And we're seeing some of these. So if you caught the Canadian dollar breakdown, you've probably moved your stop to below, just above this area here. So you're actually getting pretty close to stopped out for a profit on the Canadian dollar breakout. Great British Pound, Japanese Yen. Great British Pound still between our areas here. Has not come into our play zone. Japanese Yen, we are, you know, I've got a really hard time picking really on any of these areas. You know, we've got this area way down here, which I'm not so sure this is a phenomenal area simply because we chopped around there for quite a while. I'd have to go back and look and see if there was a holiday period or something in here as to why this was so blech. I mean, it's a Sunday and a Monday, so I'd have to go back and I think that might have been a holiday date. But there's really nothing in here that I'm in love with. This area here is not a bad level if you want to take a flyer. Very small area. Could be an area if you decide you want to take a flyer on something. The nat gas level that we had talked about, still nicked by a tick. Not there yet. Has not come back into play. Nothing to see here. Move along, people. Nothing to see here, says a South Park reference. We've got another area right here that was formed and created that could become a pretty valid reversal. Not a huge fan of when it was created, though, so keep an eye on the arrival as it comes into here, to the point where I'm actually going to change my line to a dashed line. And then there we go, copper. So copper, we had identified a potential short in copper, and we identified the crap out of that one wrong. That one just blew right through, no stopping it. There was no ifs, no ands, no buts about it. Do not pass go, do not collect $200. That one just blew right through the level. And, you know, sometimes that will happen. I think the word is que sera. So, all right, I'm feeling a little loony this morning, but it is a Friday morning. So if you guys have any questions, please don't hesitate to reach out. Until next time, we'll be back on, I think, probably Sunday night with our weekend edition. And if you've got any specific questions or comments that you'd like to see, leave them in the comment section below. Do me a favor, if you haven't already done this, tell a friend about the video. I'm doing my best to get as many people on here as we can, and it'd be great to just start to expand and grow. So thanks, everybody. Hope you have a great day. See you soon.